Taking a look at today's interest rate markets, I want to focus on the 10-year note today. We're seeing a bid continuing in the 10-year space. We're seeing a rally for the second straight day here. We're looking at the 10-year pushing back up, to the upper end of the range here, really, when you look at the price action for the month of November. And when you look at some of the driving factors pushing the 10-year up to about the 129.22 level, when you look at that December contract, I think you have to point to the data today as part of the reason why we continue to see the long end of the curve being bid up. And we got some consumer confidence data this morning that was a little bit lower than expected. It's a 4-month period now where we're seeing lower consumer confidence. So once again, if the consumer continues to lose its edge here as we move into 2020, that could be a possible play for the Fed. So something that the market's adjusting for slightly here. Nothing too outside of what the expectations were, but certainly on the lower end of the range. So you had that come out. We had housing data as well, a little bit stronger than expected. But I'm telling you, tomorrow we have a lot of data before we go into the holiday on Thursday. And you got personal income and spending and the PCE inflation number in there. The market's going to be focused on that, and the GDP revision as well as the Fed Beige Book later in the day. So I expect those things to be a driver here as we move into tomorrow's action. And looking at the yields right now, let's look at the 10-year yield. It's pushing back down to the 1.74 level. So again, down in the lower end of the recent range. And you also are seeing the 2-year, 10-year spread continuing to condense. Again, nothing to a point where you'd hear the talk about recessionary type of environment or concerns about that, but we are seeing it compress now. It's about 15 basis points. We actually saw as low as 13 basis points over the last 24 hours. It's widened out a little bit, but nonetheless well in from where it was just a week and a half ago. So we are seeing the long end of the curve being bid up and the short end is kind of holding steady, as once again overnight we did hear from Fed Chairman Powell indicating that basically they're okay with where rates are. They do not expect to be moving anytime soon. And I think that's why you see that short end of the curve still holding up here relatively strong with the yields, but we're seeing the back end being bid up because you're having numbers coming out like the consumer confidence number that has market participants looking further down on the time horizon for possible reassessment of risk and therefore maybe laying off some risk and bidding up the back end of the curve.